You're watching Risk SA TV. We're at the end of the first day of the PSG annual conference at Sun City. I'm joined now by Bertus Visser, Chief Executive for PSG Insure Distribution. Bertus, tell me a little bit about it. It's been a difficult period for the short-term insurance sector. What have been some of the key challenges for you on the distribution side?
I would agree that it's been a challenging time, but I think if you specifically look at PSG, we've basically gained market share. So if you compare ourselves to the rest of the market, we are doing better than the market, and perhaps maybe it's because we're doing certain things right. We specifically focus in terms of organic growth in terms of our business. When I say we focus on organic growth, we put a particular focus in terms of advice. So we really value the advice in terms of our business. And then we also we actively acquiring businesses, bringing new people into the business. So although the market has been tough, I would say from a PSG perspective, we are gaining market share. If you go back to the numbers that's been presented, we've grown by 11 or 12%, which is 3% ahead of what the intermediated market has done. I think if you also look at the intermediated market versus the direct market, the direct players have been aggressive. I mean, they have entered the market quite a few years ago. They've been very scientific. They've been very successful on the personal line side. But intermediated players have also responded in terms of the way they price. So they've also responded in a similar way to which the direct players are pricing in terms of their methodology. So it's been a tough market on the personal lines, but I think it's starting to stabilize. Your direct players is also going to target the commercial markets. So the advisors in that intermediated space needs to know that they kind of have to respond to it. And they're going to attack that market through their inbound call centers. They're going to do it through, obviously, their media. And they're going to be rolling their products out to the intermediaries. So it would be interesting to see where the intermediaries actually take the product of the direct players and start to sell it to their commercial market.
So for the year ahead, what will be the key goals on the PSG Insure side?
Our key goals is really top line revenue in terms of to focus on that, and basically we achieve that through organic growth acquisitions. We also ensure that we try and do business through our platform because it just makes it easier for our intermediaries. So very specifically focus on organic growth, focus on acquisitions, and also try and focus more on commercial business versus personal business. We find that commercial business is just more sticky and more profitable for the broker practices.
There's been quite a bit of discussion today, of course, about the incoming RDR and the changes that are on the table with that. Francois spoke today about the fact that he's confident that PSG is in a strong position and is going to be well positioned to manage those changes. What are your comments around that from the Insure side specifically?
I would agree with all the comments that have been made by Francois and by Dan. We've always been someone that basically we support regulators. I think if you specifically look at RDR, I think we're very well positioned. We see it more as an opportunity because it's also an opportunity to go and level the playing fields out there. So certainly from our side, it's a great opportunity. We have submitted our comments to the regulator. We've done that directly with the FSB. We've also submitted our comments via the FIA, so we've really made the same submission just through two channels. We actively engage with the regulator. I think we've seen them at least 2 or 3 times after we've made the submission. And although nobody really knows what the final outcome is going to be in terms of RDR, we have indicated our willingness to actively participate in terms of all the different work streams. I think there are some of the issues or some of the policies that are contentious. I think it's going to take quite a bit of debate on maybe a few of them. But again, we support the RDR from a principle perspective. I think there's commonality between what they've set out and what our goals are. So again, we see it as a great opportunity for ourselves.
What are the kind of key contentions for you from your perspective, albeit that you support the regulation?
Um, I think that it's difficult to go into that detail because I mean there are 55 different regulatory policies. So if I mean we can put it into three categories. I mean there's a category that we say we support quite a number of the policies. Then there's probably a category where we say we need clarification in terms of it, and then there's maybe a few points that we think are contentious. I can maybe mention some of the contentious issues. I think the whole move towards an activity-based approach is something that's going to still be challenging. It's something that we are not used to from an industry perspective. With discussions I've had with various groups, I think it's also it's a topic that it's very difficult to find consensus in terms of it. We're also concerned about the complexity that it brings to the market, you know, to move to an activity-based. It also may potentially imply that we may operate at a different level of commission. So the structure may remain, but whether that's going to be increased or decreased, time will tell. The second contentious issue is probably, I mean, brokers will be allowed to charge advice fees, but they won't be able to charge policy fees again. Again, we're concerned about the unintended consequences that may follow from this. And then maybe lastly, a big one is the capping of binder fees. Whether that's commensurate in terms of the services being delivered, time will tell. And I think also we're concerned about the principle in terms of free marketplace.